I know you want to become a full-time trader in the year 2023 and you've been finding it difficult to concentrate fully on crypto trading. This is a video that is going to help you and give you tips on how to become a full-time trader in 2023. I am Arab the Plug and you are welcome to my channel where I talk about cryptocurrency trading, business and lifestyle. And in this video, I'm going to talk about tips that can help you become a full-time trader in the year 2023. One very important thing is to know that being a full-time trader requires a lot of work. It is not something easy, and I know that a lot of people want to become full-time traders because they know the freedom that comes with being a full-time trader. And being a full-time trader doesn't mean that you don't get to do a lot of things. It gives you freedom to do a lot of other things. That is because, let's say you are a day trader, all you need to do is get into your charts, do whatever you have to do, whatever analysis you have to do for the day, for the trade you are going to take for that day, and take your trade and rest back and await your profits. So that's just, it's as simple as that. Because when you day trade or you do some kind of trading, it gives you some kind of freedom that after doing what you are supposed to do, you just have to let the market do what it has to do as well. So being a full-time trader doesn't mean you don't have time for other things. It rather means that you are going to get freedom to do whatever else you want to do aside trading. You can decide to be a part-time trader, even though if you want to be a part-time trader, this video is not for you. And I'm going to drop a video on how to become a very good part-time trader. Let's say you are a medical doctor, you are a lawyer, you do a 9-to-5 job, you can as well be a trader. But this video is trying to help you become a full-time trader in 2023. So now, there are some tips that you need to become a full-time trader in 2023, and there are some clues that you need to master, some things you need to master before you can become a full-time trader. And I'm going to give you a detail of everything in this video. But then the first thing I would like you to know and take note of before you can become a very good full-time trader is to understand risk to reward ratio. And I need to say it everywhere that risk to reward is the most important thing in trading. This doesn't mean that psychology is not important. It doesn't mean that risk management or account management is not important, and it doesn't mean that technical analysis is not important as well. Every other thing are important, but risk to reward is something that's going to tell you how much money you are going to make, or how much loss you are going to incur, or how good are you going to manage your account. And it's definitely going to reflect in your psychology, in your FUD, in your emotions. So understanding risk to reward ratio is very cogent when it comes to succeeding in the cryptocurrency industry as a full-time trader. And let me tell you why. The reason is that if you want to become a full-time trader, if you want to trade, if you want to take a particular trade, let's say you want to invest in something, risk to reward ratio gives you a clue of what you are risking against what you are going to gain. Let's say you want to do a business with 100,000 naira, for example. Let me say $100, for example, and that business is going to give you $200, and that's 100% profit. You mean $100 is going to become $200? That's 100% profit. But that business is risky such that it might take all your $100. If you are not careful, then you are not doing a good business, because that same business that's going to give you $100 can also take out the whole $100 in the same time frame. So it's too much of a risk. So as a trader, you have to know that your reward should be much higher than your risk. And that is why I used to tell my students that if you want to trade, it is very good that you have at least a risk to reward ratio of 1:3. And it means that you are risking 1 for 3. And let me give you an example. Let's say you want to trade a crypto asset or whatever you want to trade in the crypto industry, and you are going to you are doing your analysis and you want to enter a position when the price of that asset is $2 and your price target is let's say $5. Then your stop loss, which is going to dictate your loss if you are ever going to lose anyway, your stop loss should be around $1. So with that, you are risking just $1 to make $3. And that is what a good risk to reward ratio should be. And it could be more than that. You can be risking just $2 to gain $6-7. If you have a trading setup with a very good analysis, where you are going to only risk something like $2, I'm just using $2 as an example. It could be $10. You could be risking $10 against making like let's say something like $15-20. It's a very good thing. So this to reward ratio is very important, because you should not be risking $50 to make $50. You should not be risking $50 to make $60. It is not reasonable. So that is why a lot of traders do not take this part important, because they do not understand that even if you are going to lose money in the cryptocurrency market, it should be very small compared to what you are going to gain in the trade. So if you have, and this contributes to your risk and account management, if you have, let's say you have a portfolio of $1,000 and you are getting to each position with $100, I get into 5 positions and your risk is $10 per position. If your risk is $10 per position, for example, and you lose all the 5 trades, you are just losing $50. And let's say out of these 5 trades, you win 3 and you lose 2, and you have a reward of about, let's say, $30 on each trade. That means if you make profit on 3 of the trades, you are going to make $30 times 3, which is $90. And the 2 trades you are going to lose just $20. So if you make $90 and lose $20, that's a profit of $70. So understanding risk to reward management is very, very paramount if you want to be a full-time trader. If you don't understand it, find a way to learn it, because it is going to make you or mar you if you want to become a full-time trader. So now, after talking about risk to reward ratio, then how do you get to know risk to reward ratio? Where do you get it? It's on your chart. And that is going to lead me to the second tip I'm going to give you. Understand technical analysis very much. Because even if you understand all the fundamentals, even if you trade the news are not going to be accurate all the time. And remember, trading is a long-time business. It's a full-time business. If you are doing it full-time, you have to know that it's a long-time business. You could be trading swings. And let me tell you, if you are doing trading for a long time, news is not going to be coming every time. Apart from the CPI news and all those news that come frequently, they are not even going to be coming every week. So relying on news fully is not going to help you in your trading. That is why you have to learn technical analysis. And the good news is that if you want to learn technical analysis and you are looking for a community that's going to help you, you can find a link in the description below where you can get my 10 Days Crypto Mastermind, a course that helps you in learning technical analysis and other parts of trading. Technical analysis is going to tell you this is where you enter the market, this is where you exit, this is how you find your risk to reward. You are going to learn stuff like chart patterns that's going to tell you at this point this market is going to reverse, at this point this market is going to continue the trend. You are going to learn trend, uptrend, downtrend, and it's going to give you a lot of exposure to opportunities, because many people do not know that even if the market is coming to the upside, let's say Bitcoin is $16,000 today and it comes down to $14,000, traders are still going to make money from Bitcoin coming down to $14,000 because they can short sell. And that means that they are going to predict in the market that Bitcoin is going to fall or drop in value, and once it drops in value, they make money. So understanding technical analysis is going to expose you to a lot of opportunities that's going to help you become a full-time trader. If you want to take trading as a business, as a full-time job, and you don't know technical analysis, then you are on the wrong path. Also, you have to understand news and community sentiment. You have to understand news and community sentiment. You don't say that, because some people can be day traders, and I've mentioned it. You can be a day trader and you can be a scalp trader. If you are a day and scalp traders, news and market sentiments are going to affect your trading opportunities, which will likely not affect you if you are a swing trader. But if you are a scalp trader or a day trader, news coming in every day is going to affect you, because there might just be one bad news about Bitcoin and the market turns to the upside. So if you don't take news and market sentiment important, you are not going to be a full-time trader, because it is going to, those are things that can affect your trading. So let's say watching out for the news of the Fed when it comes to the interest rate in the United States is something that is going to always help you when you are trading. Watching out for CPI news is going to always affect your trading positively or negatively. So you have to like watch out for all this kind of news. And one thing that I've noticed in the market, I've studied in the market over the years, is that once MicroStrategy says they buy Bitcoin, most of the time Bitcoin drops in value. So those are the news that you have to, those are the market sentiments that you have to like get used to whenever you want to become a full-time trader. The last thing I'm going to mention in this video, but before I mention that, if you are joining this channel for the first time, you are getting to see my video for the first time, and you'd like to know more about cryptocurrency, about business, about lifestyle, I would implore you to subscribe to my channel. And also, if you are a returning viewer, and even if you are seeing it for the first time, I would implore you to hit the like button so that it helps YouTube algorithm and they show this video to a lot of people so that they can also benefit from it. So let me go to the last point I'm going to mention in this video that is going to help you become a full-time trader, and that is understanding the order types. Understanding the order types. If you want to trade the cryptocurrency market, you have to understand that we have different kinds of orders. We have the market orders that talks about the market execution. That means you are going to buy or sell at the current market price. We have the limit order, we have the stop limit order, and we have the OCO orders and trailing stop loss orders and the likes. You can find them on different exchanges that you use to trade. So those orders are very, very important, and they help you like place very good and accurate trade. Let's say you want to enter a market and you are doing analysis and you are expecting that particular asset to come back to a particular support level. So you have to like make sure you place your order at that particular support level using different entry strategies that you adopt. So those things are going to help you. But if you have problem understanding the other types in the crypto market, I have a video that I'm going to link in the description below so that you get to watch that video and understand how to place orders and stuff like that in the crypto market. So like this video, share with your friends, subscribe to my channel, and I'm going to see you in the next video.